So this is going to be a quick little scan for the week of the 22nd. The things that I'm watching, the focuses of mine, and it's going to be a relatively short video because I do think that there's a lot of long opportunities going forward. I think that there's been a lot of great commons trades, since the April bottom, since the higher lows we found on some names in July and August. And I think there's some opportunities continuing to develop. And as we get closer to quarter four, we're going to see a lot more opportunities alongside, I think, unless, barring something drastic happens. Um, and this doesn't necessarily mean, that we have to have an extensive run up on indexes, right? We obviously have this kind of melt up effect, but kind of the sticky, stagnant price action, right? Where there's not really a clear edge on indexes. It's more or less just the dispersion happening on the individual constituents within these indexes, right? You're going to have names go down and underperform. You're going to have names go up and outperform. And that's how these things work. When we have a sticky index range. All right, and so when I look at SPY, when I look at Qs, we continue to see exhaustion. I mean, we continue to see a notable amount of volume pouring in up here, especially on the OPEX print, and on the Fed meeting. But there's not necessarily, when I kind of look at this, much of an edge that I can kind of identify on indexes. More or less, we do have a window of weakness opening up this week, so that's something that I'm going to kind of take into consideration. But um, I don't know. I have a lot of longs that I kind of like, barring, like I said, something drastic flipping the tape prior to next year. I have a lot of longs that I like, and the short focuses that are the semiconductors and the financials that give off those red flags are not necessarily giving me such a clean edge right now, short side, right? You don't have such a clean edge on financials. We never cracked that 283 range on semiconductors, um, and it's just not much of a vulnerable opportunity on the short side quite yet. Like I said, though, I think that there's going to be opportunities setting up regardless on a lot of individual names and the broader market soon. But I don't know. Not much that I'm really confident about short side quite yet, right? We had some great longs. Tesla's really good within this compression, and there's a reason that it moves so easily here. And this path of least resistance through like 360 is kind of established. And there's just a great commons trade here. You can take the options opportunity. I don't really want to personally within this little like 4-day pattern, defending this gap, but you can potentially take it. I'm more or less kind of focused on the commons opportunity that we have here, on Tesla and how it moved like ease, but now we're seeing those signs of exhaustion kind of come into effect, and with that, it doesn't really necessarily offer much of a short that I'm super confident in now, regardless. So there's Tesla. AMD, I still do think is a short-sighted focus that we can look at. Um, Not within this range though. I want 170 to 176 most likely. I'm not really super confident in the kind of development of how this is panning out right now in terms of taking a short. Um, Nvidia as well. I mean, this is just, it's not a good chart. Not bad enough for me to necessarily short this personally, right? Meta putting in a pretty gross daily candle on the expiration, right? Building out a range, but I don't know. A lot of these don't give me such of an edge. I do think that Apple can still be a short. This could potentially just be heading for another true UTAD above the December highs. Or not another, but a true UTAD above the December highs, right? And that wouldn't be necessarily gross, right? This could be your preliminary supply. This could be your buy climax. This could be your reaction. This could be your UT. This could be your kind of test or last point of supply, your sign of weakness, and then this could give us our true UTAD above this range, right? And that doesn't necessarily seem to be a bad thing here, right? When you look at this chart and understand how this moves, I mean, this could still be a super clean short-sided trade down to the sub 164 range next year, right? I don't think that this is a good buy, but I don't think that this was a good short within this range. Following the April lows and the subsequent consolidation we have into the fake out on the earnings report in August, right? Something I'm going to be keeping my eye on. We have Microsoft as well. Once again, a chart that just doesn't look super clean. But I don't have an edge on these. Google continuing to float higher. This was a great buy down here, but I just don't justify taking new positions on those names quite yet. right? Now, as far as my individual focuses go, UNH is going to continue to be alongside focus. Like I said, there's a handful of trades that are developing within here. There's a long-term buy down here for 480, 490, 500, right? There's a short-term buy down here for 335 to 380, which we're now seeing, the rally, the consolidation, the breakout, failure within this gap. And then there's the options trade. There's an options trade down here. When you understand how the hands change and the inventory collection occurs, there's maybe one developing in here. I don't really like it quite much. What I like here is the opportunity setting up on options with a very objective risk at the 335 spot and a very objective target at 363 to 378, right? You're seeing the reaction, you're seeing the strong bids, you're seeing the subsequent consolidation, and now we're seeing a pivotal point within this chart held on a daily perspective and a pretty crystal clear target when we see the lack of aggressiveness from the sellers within this gap, right? And you can just understand where the draw is going to be in terms of supply and demand and in terms of the 378.75 spot being our eventual target within this gap. And then we can look for maybe a broader contextual high or low, or maybe just, a structural continuation breaking and basing 380, and then we can rally this to 480 to 580. But this is a really clean opportunity, and it's one that I've been on since May, and we finally get the trade opportunity done here, and now we're finally getting those options trades setting up as well. My eventual target is going to be that 490 to 500 spot most likely, in terms of the commons on both longer and shorter term. 580 is up there, but that's a little bit speculative. But beautiful chart, and we have a structure setting up here. And even though we're entering a window of weakness, this is a name in a sector that tends to kind of outperform, right? And this is a name in a sector that doesn't necessarily have to, and not outperform, but that can perform, not the same as the broader market, right? It's been lagging relative to where we are in April. And this could be that risk-off kind of slower name that gets the movement and is an outperformer during this kind of period of continued dispersion within equities, the individual constituents, right? So phenomenal look, and setting up another trade now to 380 probably within the month, not within the month, in October. And I think this looks phenomenal, right? And I think this is setting up a very clean, objective risk to reward with a very clear-cut target and then a very clear-cut target for your runners on your options position, right? I think this looks phenomenal. When I look at ZOM, I don't mind how these names look in terms of the energy sector for a little bit more continuation, right? We're on like our 5th daily test of the bottom of the confines of the April 3rd gap, where the continuation from those sellers hasn't been very evidently, aggressive in terms of follow through. But it's just a common trade for me, right? We're finding the breakup structures. We're finding the potential high or low here. We're sitting underneath a bear gap that hasn't really gotten a lot of fall through in terms of the sellers showing their hand off of said bear gap. Little things like that are kind of very pivotal in terms of why I think this can run, but also, I've discussed time and time again why I think that this can, in the eventual potential opportunity, continuing to rally us on tech equity, these names can kind of underperform and take out these lows in April, fill this gap in 72 from October of 2022, and then we can kind of see that rally and the outperformance of energy kind of be a bigger picture than this range right here. So same kind of idea when it comes to the energy sector. I really do like Rivian comments here on that Friday, kind of newsprint, and then the subsequent pop we get after. I mean, this is, an 18% run up off this newsprint from last Friday. So I really do like this Rivian chart for a move to 17 and 19 to maybe even 20. I really do like Nike soon. After the kind of exhaustion that we've seen. I mean, I've talked about this a lot. The accumulation that began in June, July, June in general. The April lows being that kind of spring. The really notable buyer off of that, and then the daily exhaustion that's been very evident within this range. Now potentially setting up a higher low. And where are my targets on this going to be? I mean, you can take this from, sub 70 up to 80 to 90 to 100. This is a very notable historic amount of volume that's been developing within this range underneath COVID lows. And we're seeing very strong structural attempts to mark this up, met with the lack of follow through from sellers. And if this weekly character kind of changes, I think this is going to spark a move to 84 to 90 and then to 94 to 100. So that's a clean trade setting up. We have the report next Tuesday. This will just be a commons trade for me, and eventually an options opportunity, probably through that $80 range. But this right here is setting something up beautifully in commons, and this gap is something that I'm watching personally. Snow looks really nice, right? This was a commons, not a commons trade. This was an opportunity underneath the COVID. God, I can't even talk. Underneath the previous all-time lows in November of last year, not November of last year, but just in last year in general, and then the November report sparking a 30% move on the all highest volume ever, stalling, putting in a higher low in April, rallying into this 2024 gap, right, and then seeing the higher low into the report that we had in August. And now what we're kind of seeing here is, Jesus, Jordan Love just got obliterated. Now what we're kind of seeing here is just a subsequent pop and consolidation, right? Taking out the earnings gap, right? Giving you that peg look, giving you another low taken out, and the exhaustion being very evident, and the kind of capitulation happening on this September 16th candle. This is a good look. 3 weekly inside bars with a nice influx of volume last week, right? And you have a trade setting up not only on commons to fill this 264 gap, right? But you also have a trade setting up on options, right? And the options trade setting up here is going to be off that 230 range, right? If we can get a nice break, we can get a nice, maybe fill this gap at 240. Right, we can get a nice break. Fill this gap at 240, base 230. That can be a similar trade to UNH, where that's your objective risk. A previous resistance established as a support. And you can run this up to 250 to 260 on options, right? So that's a really clean look as well. JD looks nice on commons still, potentially. I mean, this is when you have to take off the bulk of your position, most likely, after, a 15% run up in a couple of weeks. But I like these China names on commons, especially this one, the 35 to 40. And that's pretty much it, right? Lyft was a clean trade. I don't want to be in this anymore personally after, $10 rally from $13 to 23. Schwab was a clean short, but like I said, I want a little bit of a better picture on the financials. PA&W potentially heading for that UTAD. Palantir potentially heading to take out those highs again. We never really saw anything clean in terms of another opportunity here. Intel with a massive gap up. Like I said, though, now I don't really like this as much unless we see a subsequent kind of picture-perfect higher low put in. But this was a really clean commons trade as well. Lulu, I like Lulu on like, this would be like a long-term buy focus within this 130 range personally. I think above the 226 range, we can potentially take some trades on this. I wouldn't touch it quite yet. But this is going to be something that I am watching in terms of commons to take this back up to the 400 spot. But I'd rather see something be a little bit more clean in terms of, risk to reward here on commons, right? Something a little bit more of a picture perfect kind of opportunity, not picture perfect, but of an opportunity in general that's a little bit appealing, right? We see the higher attempt at a higher low in August. We see those taken out in June. And then we see this massive influx of volume, some of the highest ever, but kind of in the middle of nowhere, right? We never took out the COVID lows. We're not at a higher low range, right? So I want to see something a little bit more appealing before I take that opportunity, right? And then finally, we have Coin, a name that looks pretty good in my opinion, right? Obviously, we had the big bottom at 30. We had the big run up into all-time highs in August, right, or in July. But what we see here is that earnings gap down in July, and then I think I discussed this, but just a higher low that we're finding on like a weekly perspective within this massive, massive imbalanced move. True bar by bar imbalance following this May consolidation into the run up in June. And then the exhaustion showing, and we see the report spark a gap down. We see an initial low put in, a failure within that gap, those lows taken out, and then we see a really nice weekly candle closure last week and the week before. And now if we can just see that 335 spot based, a third opportunity just on a progression gap reclaim, very similar to UNH Coin and Snow, very similar to UNH and Snow, where you have an objective risk at 335 and an objective target at 378. And this is just a pretty, clean opportunity setting up, in my opinion, with the falling volume matching it, and a very clean target in terms of this like 370 to 377 range for a trade setting up. So that'll be a watch, right? But there's not much, in my opinion, right? There's a lot of good commons trades setting up. But I think you have to be, pretty passive with your approach on leveraged exposure. And I think that you just have to be pretty patient in terms of your short side exposure. Now, we are entering a window of weakness, but I'm going to be completely honest when I say, like, this doesn't have a lot of shorts that I see that set up very appealing. That look very appealing to me, right? And if I'm wrong, I think there's going to be some opportunities that could potentially set up and you could trade that. But more or less, what I'm seeing here is going to probably continue to be longs all throughout this quarter, starting in October, obviously. And we have the end of quarter flows, right? So this window of weakness is potentially going to be shut down by just the flows that we have leading into next Tuesday's expiration for the quarterly expiration, the quarter 3 expiration and the quarter 4. So yeah, there's not much of an edge here. Short side timing doesn't really line up as well, and there's a lot of names alongside that look pretty good on commons, and then we got the 3 options trades that I'd be pretty confident in taking, barring a drastic flip of the tape, and with a pretty objective risk at 230, 335, 335, right, and some pretty clean targets on just October or November expiration. So that's pretty much it. I don't have much else to say, and I'm pretty confident in a lot of these longs, like I said, barring a significant flip of the tape.